Well, we heard it today from the Federal Reserve Chairman Jerome Powell. He gave us a warning. He told us what is to come. So in today's video, I want to share some economic news with you so that you know exactly what is about to happen. Because what I can tell you is things are potentially going to get worse before they get better. Well, here's what we know at this time. Today, the Federal Reserve Chairman Jerome Powell, he said something that ultimately spooked Wall Street and is causing millions of Americans to simply panic. Now, what did he say? He said, and I quote, "While higher interest rates, slower growth, and softer labor market conditions will bring down inflation, they will also bring some pain to the households and businesses. These are the unfortunate costs of reducing inflation. But a failure to restore price stability would mean far greater pain ahead." Now, let's talk about this. This is scary when the Federal Reserve Chairman is coming out and saying that restoring price stability means far greater pain ahead. Why would he say this? For one, he has been saying that inflation was transitory. He said this for like a year and a half, and people believed him, then nobody believed him, and now they're saying that no, we are going to get inflation under control. There's no need to worry, no need to panic, but yet the American people are starting to panic. Wall Street today started to panic. Now, Jerome Powell even said that the Federal Reserve isn't worried about the last few months. And I've been seeing this from a lot of different media outlets where they're saying that the past 2 months have been a great indication of where we're headed, for the United States economy. Because we were at 8.6% inflation, then we went up to 9.1%, and now we're back down to 8.5%. That's good. That shows that we're making progress, right? Here's the problem. Some are saying that no, this isn't true progress because they are worried that inflation will become entrenched. And once it becomes entrenched, the best solution, according to multiple experts, is to pretty much Paul Volcker the economy, where he pulls the rug out. He spikes interest rates to 10, 12, 14%. If that happens, I guarantee you, the housing market will completely crash. We will see auto loans. People will not go and get them. We're already seeing issues with people trying to go and get auto loans anyway, because if you can even find a vehicle to purchase. But again, these are things that are going to happen. Investment back into a business is not going to happen at 14%. We're going to see some major issues happening very soon. Now, the Federal Reserve said that they have their eyes on the bigger picture, and that is to get back to that 2% inflation rate. We're at 8.5. That means we got to come down 6.5%. That's not going to happen overnight. Now, Jerome Powell said that the past 2 months, yes, they are showing signs of improvement. However, he said that the consumer price index and the producer price index, they are staying relatively the same. So that shows that what the Federal Reserve has been doing by raising rates, it is working. It's helping. However, and it's a good sign of that we're not seeing rapidly rising prices anymore. But the Federal Reserve has to stay on it. They cannot stop now, because that's exactly what happened back in the late 70s with Paul Volcker. Is he didn't raise rates. He wasn't that intuitive with what was going on, and so because that, he was a little bit behind. And when it ultimately came down to what do they need to do, well, he pretty much pushed the economy into a recession. So we're going to see what happens, but that's one thing that the Federal Reserve Chairman Jerome Powell and the rest of the body, they don't want to do, is push the U.S. economy into a recession. At least not right now. Now, the other thing that happened is, along with the producer price index and with consumer price index, both of those starting to slow. One of the main things is that gas prices have come down quite a bit. Now, This is a very positive sign as to where we're headed. But the Federal Reserve, again, they're not just looking at the last couple months. They're looking at the bigger picture, and they want to get back down to 2%. They believe this is going to take some time, and that the American people, unfortunately, are going to suffer while they attempt to get inflation under control. Now, if they cannot get inflation under control fairly soon, that's where we're going to be in a world of hurt. Now, one thing I can tell you is that many experts are predicting we are still going to have 7% inflation by the end of 2022, where you have, like 4 months left? So we have 4 months left of 2022, and we're sitting at 8.5%. Even if we come down, let's say in the low 8s, and we'll get the next reading on that in, 2 weeks. So that's kind of the thought process is, let's get down into the 6-7% range. Then hopefully in 2023, we can really tackle this. But again, it's not going to happen overnight. The Federal Reserve doesn't want to just come out and raise rates by 200 or 300 basis points. That's not their goal. Their goal is to just be consistent, maybe 50 basis points every single meeting. That might be where they're headed. But again, we will see. And I'll explain what the expectation is in just a minute. But here's something else that was said. And the Federal Reserve Chairman Jerome Powell, he made it very clear that those that are not prepared or were not prepared, they're having a tough time. And for many people, the people that are having the toughest time are those that don't have any assets. They have no assets to try to get them through these tough times. And assets could be something as simple as a car that you can sell, an RV, a house, right? Stocks. You can cash out your retirement accounts. You can borrow against maybe a life insurance policy, right? If you don't have any assets, you cannot take anything out. You got nothing. But again, not everybody has this luxury. They don't have the ability to do this. For example, did you know in the United States, only 45% of Americans, or about 45% of Americans, do not have any asset whatsoever? That means no real estate, no stocks, no 401k, no business that they can leverage. That means we got close to 150 million people that have nothing. And all they see is prices continuing to rise. They don't see their assets going up in value. And if they don't have anything that's going up in value as prices are increasing, well, I can tell you right now, it's not a great feeling. Now, at this point, the Federal Reserve is stating that they will fight inflation. Their goal is not to promote growth at this time. This means that businesses, chances are, they're not going to be hiring. Layoffs are going to continue. Actually, they're probably going to increase. Wages and wage increases are likely going to be put on hold. And honestly, the economy is going to struggle. But while all this is happening, expect prices to slowly start to drop. However, and I just want to be very clear on this because I've said this before and a lot of people don't realize it, but even though prices are going to drop in the long term, there could still be that price instability where prices go up and down and up and down. But just understand, over the long term, hopefully we see prices decrease. The goal is to get consistent deflation over time. Okay, at least that's according to the Federal Reserve. But here's one thing that Jerome Powell said today that's actually fairly telling as to their plan moving forward. He had this to say, and I quote, "Price stability is the responsibility of the Federal Reserve and serves as the bedrock of our economy. Without price stability, the economy does not work for anyone." Keep that in mind. Price stability is the responsibility of the Federal Reserve. So we need to make sure prices are stable. And I can tell you right now, I would really want to go. I've been seeing great deals on houses right now, on some real estate. But I don't want to go and buy something if we're going to continue to see prices drop. And as an investor, I want to see price stability because I don't know when to buy in. And it's not just real estate. it's with stocks as well, even businesses. I've been looking at a few different businesses to purchase, to add to my portfolio. And the problem is I want to see stability. Even if I have to wait and I pay more in 6 months or a year, I would more than gladly pay a little bit more if I am sure about price stability and the business itself. So here's what we can expect moving forward. According to reports, the expectation is that we're going to continue to see between a 50 basis point rate hike and a 75 basis point rate hike. Chances are we're not going to see a 100 basis point rate hike, and I don't think we're going to see anything less than 50. I think the goal is to get it at 50 and just keep doing 50, 50, 50, 50 every single meeting until they start to see inflation is dropping back down to a more manageable level, which is likely to be about that 4 to 5% range. At that point, we could see the Federal Reserve start to let off, and instead of 50 basis point rate hikes, it could potentially go down to 25. But again, that's the expectation moving forward. As always, as I know more, I promise I'll come back on and share all latest news and updates. So again, if you have any questions whatsoever, please ask your questions down in the comment section below. Again, I just wanted to kind of fill you in on the Federal Reserve's warning that they gave us today and what they expect is coming in the near future. So again, thank you guys for watching. Consider subscribing, and I'll see you guys on the next one.